are in now. So what will be the next steps? You may see a lot of confusing information and predictions which may overlap with your current knowledge. For example, this presentation from the quant shows over ledger, the interledger protocol. The opposite side for that from quant will be the platform used for central bank digital currencies and other transactions in a digitized world. So what about ILP, the interledger protocol? A doubt, a question is actually raised there, right? And to explain the opposite side of the same token, the same coin, I would actually show you guys a recent tweet from IMF, and that actually takes you into the document referred in it, which is here in the IMF's own website. So they actually talk about R3. So we will actually have to go through R3 and how they think about central bank digital currency and innovation of payment, and we will actually discuss through the white paper. Don't miss any points, as those will actually reflect into the further information which we will be discussing today here. And this kind of gives us a signal to sit back and relax. Don't be confused, don't be stressed. Why? Because the world is actually changing, and now the US banks are entering in it, meaning they have the regulatory green signal to go ahead. So will it be only the banks? For sure it won't be. There are other institutions who will be acting as competitors to become the custodians, right? It will be Fidelity there, it will be Buck there. There are other institutions who will be competing to manage and to get new customers in, right? So the stage is set for a tight competition for customers in the digital arena. Welcome to the Scientific Investor family, where we discuss crypto and science behind investing regularly. I'm showing you guys this because of that boom highlighted by Brad Garlinghouse. For me, it's like a problem is solved and let's move ahead. That's a green signal actually. And as Chris mentions here in this particular video, the limitations were actually tying up us. That's the regulation, right? And now it's actually good to go. So let's listen to this.
We've got to get those three things: tech, capital markets, and regulatory authorities working together. That's difficult, harder than the internet, in fact. So I think a lot of it is staying with it, working within the incumbents, but not keeping our eyes off the prize of access to all.
So working with the traditional firms are actually required, because if we have to thrive here as investors, as things change, we as investors should be smart, right? Go through both fundamentals and technical side. This will actually give you and me the ability to better understand what to do next and how to improvise in different situations. Like we actually see, the fundamentals increasing day by day, new partnerships, new corridors and all, and we also see other information which kind of indirectly affects the same space, and that's kind of the fundamental analysis, right? So when we actually look into a technical aspect, charts actually gives us more idea about what's actually happening. Now we actually previously talked about a particular thing, how it was reflecting. We'll actually go through the technical analysis by the end of this video. First, we'll have to go through this document and discuss detailed every point. We have to actually highlight this. So once we go through that, we'll then discuss it. So first, this one. Say when we actually see this, don't just neglect ILP will be the only one, because there are, in the tokenized economy which we are entering, the digitized and tokenized way, what we can expect is it won't only be the central banks who will actually tokenize or come up with the token. There will be commercial banks, right, like JPM Coin. There will be other commercial institutions like say Facebook. They're coming up with Libra. So in the same aspect, there will be a lot of tokens. So you actually need the interledger protocol or overledger or something which is kind of giving that interoperability layer to do that interchange or transaction. But the main thing will be what just Chris stated. He was actually working with the incumbents. They are actually working with the legacy players there in the main area of payments, which is the central banks and the commercial banks, which is connected with kind of the government regulation and other stuff. So when we actually look at this stuff, one area can be actually possible for them, which is the corporates. Their payments can be actually managed within them. Now when we actually move in through this, we can actually understand they actually talk about the race to reality, that's building a CBDC, right? Now when we actually come into this document, there is a lot of information. They talk about wholesale CBDC, retail CBDC, and how the two-tier system can actually work. So first we'll actually jump into the page number 6 here. So it's actually talking about enabling the cross-border payments, right? So at the top of that, they actually show you Bank of Canada, Project Jasper. Now, if you remember in the previous video, we actually discussed about that Project Jasper and UBIN, right? So Singapore to Canada, right? So in that one, Bank of Canada was actually using the technology of Corda settler back in that time. And you have to actually keep this in mind. The settlement asset, the first settlement asset of R3 Corda was XRP. So when they actually talk about that, keep in mind when they are participating in this, you can see R3 there, you can see Exchanger there, and you can see Payments Canada. We have actually went through the Payments Canada website and showed you the documents about how it is detailing the digitized world, right? And we had a lot of clues that it is actually leading to ILP and XRP ledger. Now, when we actually talk about these, we can actually see there are different projects being run. Say this is from Thailand, and they also work with R3. Now, whenever you're considering cross-border payments, it may not only be directly highlighting Ripple, the company. Instead, it will be showing you a lot more aspects. Now, once you understand the fundamental and the technical side of this asset, then you can actually look into the the deeper side, the technical aspects of this currency. Now, when we actually talk about hybrid CBDC, indirect CBDC, direct CBDC, retail and other stuffs, you can actually see central banks are coming in and they are actually working on synthetic CBDC. Now, in the first one also here we saw CBDC or SCBDC, which is a synthetic version, right? So in that synthetic version, what you have to understand is the issuer is a private entity which is working with the central bank. So here the quant is not actually showing that they are there, right? Instead, it will be someone from the central bank itself which will be issuing that. So if you actually look at here in the IMF's website, you can see public-private partnership for digital payments. So they are actually talking about that one too. It cannot be actually neglected. And now that we are getting regulatory clarity, green lights coming in, it's going to change the entire structure, right? So we'll actually move into, say, we actually previously discussed this one in one of our videos before, so we won't actually detail that. Instead, from this area, retail CBDC, which is hybrid, the central bank is the issuer and redeemer, and the wholesale CBDC for cross-border settlements. Now we're actually talking about wholesale token, right? Because it's about institutions, corporates, how they transfer money, because that's the huge part, not the remittance, right? When we say remittance, we understand low value payments. Now when we talk about corporates, those are high value payments, right? Now the central banks is the issuer and redeemer, tier 1 participant, and our current domestic wholesale participants, and tier 2 are foreign wholesale institutions. This would enable cross-border wholesale payments and foreign securities settlement. So it's not only about wholesale payments, it's also about securities settlement. And in our previous video, we actually talked about these dollar swap lines. Currently, dollar is the reserve currency, and Fed has a lot of swap lines with other central banks around the world, see dollar to euro towards ECB, right? And towards other areas as well. Now, whenever there is a requirement for the reserve currency, which is the dollar now, they actually do that. Dollar is going through ECB and they gave euro back, and that bond is actually kept there. So whenever they require this kind of stuff, that is actually huge payments in billions, in trillions. So when that is actually happening, in a digitized token, they actually have a digital dollar and a digital euro. They need a bridge in between for that. Now, once, say for example, ECB is receiving that dollar there, right? Now they have to actually give the dollar to those companies who have actually borrowed in dollars to repay this one. So in that aspect, it won't only be the wholesale CBDC requirement. From there, it can actually change into retail, right? So keeping that in mind, what does this do? Wholesale CBDC for liquidity swap lines. 2 or more central banks join each other's tier 1, which is at the top, we can see here tier 1, right? It's just the central banks here in 0 and tier 1. Then for tier 2, you can see institutions that can interact with tier 1, and transfer tokens between themselves. So there will be a operability layer there, which will actually be there once the ISO 20022 is completely implemented. So of course, all these examples have open governance questions that central banks will be responsible to answer. For example, what are the privacy control around payments? Now, when we talk about privacy control and look at cryptocurrencies itself, we actually have a question like how my payment is like private. Say for example, I don't want others to see my payment there, and that is where in yesterday's video we actually showed you guys Ripple is actually researching on this particular aspect. So XRP ledger can enable that particular item, which is the privacy. If they are doing the large transaction, they actually need that. Will CBDC be anonymous like cash, or would there be some level of reporting for large transactions? What are the network boundaries for CBDC and other stuffs which are related to that, right? And when we actually move into, say, we actually discussed this one previously, so we'll just go through that. Say the wholesale or retail CBDC, which is direct, which actually shows you that there will be a central bank here, and then it will actually go through different aspects of that money transfer system, which includes, you can see that network inside there. Now the domestic network can operate on ILP, and they don't actually need ILP. They only need ILP once the entire system is tokenized, and say the value in dollar is actually being exchanged from JP Morgan coin towards Fed's dollar, right, digital dollar, or like that. If that's happening, then they need an efficient bridge even in the domestic economy as well. Now the case for CBDC on Corda. What if the central bank digital currencies are actually running on Corda network for settlement aspect? Now that's not something which I'm directly taking in. I'm taking it from International Monetary Fund, the IMF itself. In the speech, they were actually talking about building the central bank digital currency, a race to reality, which was actually sponsored by R3 itself. So there is something behind that, right? So when we actually read through that, we can actually understand the entire ecosystem is tokenized first. So you have the entire digitized economy which we are entering, and the digital central bank money which we were talking about, right? The digital dollar, digital yen, digital euro, that kind of stuff. So whenever they are moving through that, now yes, you can have a question like R3 Corda has other settlement assets too. But I'll say just go into R3's website and click the settlement, and you will see one thing, right? XRP ledger for settlement. You can actually see XRP pool or XRP network. Previously we have actually done that here. I haven't actually done that today, so I don't know if there is any change, but say 2 weeks back, 3 weeks back, we actually tried that, and we actually had seen that it was XRP there, right? So now when we actually consider that here, we actually have to think blockchain enables digital storage, transfer of value. They actually talk about different aspects in which money can actually be programmed, right? And they actually talk about all the different requirements. This is needed, that is needed, this can be done like this using the technology. And when it comes to the bottom, they actually talk about the drawbacks of these blockchains. Like, say for example, first thing is data privacy, and now Ripple is actually working on that. All the rest, Ripple has already addressed these. Say for example, when the others guys are coming in and saying no, it will be the BTC, no, it will be the Ether, you just read them out this one, because this is being highlighted. Say back in IMF, they are showing this organization, and here you are reading this: transactions on blockchain that use proof of work or proof of stake consensus models settle probabilistically and can ultimately be walked back, meaning these systems cannot actually be used for these kind of transactions, right? So automatically they understand that proof of work and proof of stake won't actually work in the long run. So that is why Corda is actually working on point-to-point design, which is unique in itself, and it gives relevant parties inside, like RippleNet. You have validators inside which are selected and regulated, right? So when we are looking at Corda, what really is a transaction? In Corda, relevant parties are defined in contract code, the programmatic rule that define and govern a specific digital asset. So that particular asset is transferred from one ledger account to another. So you can understand that easily. And when they talk about the structure, we have everything else there for XRP just we don't have that data privacy in XRP ledger as of now, but in RippleNet we actually have that. So the question is, if they are operating on RippleNet and using on-demand liquidity, will they be able to actually hide the key information? Say the entire transaction will be noted on the ledger, but will they be able to actually hide the sensitive information of that transaction? I hope that can be done. Now, they again talk about the project Jasper, phase 1, phase 2, and they show you the same private network. They are doing that, and the Canada is actually involved in that. Now, what we can actually look when we are moving forward, this figure, it should actually be zoomed a bit in, because this is really important to understand, because this is like moving forward, the future, right? In this particular aspect, there's a lot of things which we actually need to understand. Say next 2 years, next 5 years, if this is implemented, everything is actually going to change. If you look here, you can see everything is tokenized, right? Even the real estate is tokenized, tokenized equity. So everything is tokenized there. Now you can actually see digital assets, but not money. That is here. Right? You can actually see utility kind of things, store of value kind of things. Then again, tokenized equities, rights, dividends, voting, store of value, and other stuffs. And then you can see the coverage of central bank digital currencies. Here you have store of value, then the unit of account, and then this one, the payments. So at the bottom, for this one, payments with Corda. So if central banks are actually working with R3 and Corda, as mentioned, highlighted or directed from there, you can actually see that in Corda, you have payment asset, faster payments, and settling across systems. Now, settling across systems, meaning you need first interoperability, because you are moving across different systems. You have to settle from one ledger to another. So you need interoperability, and you need a bridge asset to change or exchange the value from one ledger to another with maximum speed and minimum cost, right? So that is, as of now, it's XRP, and the competition is kind of really low when you're looking at R3 Corda. And there you can see the stable coins for payment asset, not the settlement. When we say that, don't be confused, payment is two, like it has two sides. One is the information exchange, which is the message itself, and then the settlement. So here the transfer of value with central bank money. So here you can actually see it's from CBDC, and CBDC can actually be SCBDC. We don't actually know that. Now, once they implement that and they say it's SCBDC, the next question will be who actually issued that token, because SCBDCs are something which is issued not by the central banks, but by a private institution. Now, when they say that, keep in mind, say for example, XLM just burned 50% of their supply. If they were actually targeting this market, they wouldn't actually do that, because the requirement is so huge. So considering that, XRP still has that potential with the total escrowed amount of XRP. So the supply is actually there, and the ability to settle in between systems is still there, and no one has actually came up and saying, like, showing that we can actually do this. So the widespread access to CBDC will be a key for central banks to fulfill their mandate of offering modern payment solution. So once the entire thing is changed, then this will come into play. Like in yesterday's video, we actually showed you one thing, right? This will all happen, and the final fire will be ignited once everyone is on board. Because if the cash is still being used, then the system won't actually work well. In order to leverage this system, they first have to take out the cash from the economy. They'll do it in different names, say in Corona, say in this stuff, that stuff, the cost associated with that, and all the other stuffs. Maybe the current crisis will actually do that. But when we actually talk about, say, the rest, non-payments related areas, you can actually consider that the settlement has to be done in between the banks and central banks. So if central bank digital currency is being used, then it is first exchanged into a bank token when it enters into a bank. From that bank, if it is going into a corporation, then from there it will be again changed into different one. So keep one thing in mind. It won't ever be XRP everywhere. Say even the banks, central banks are using ILP, say for example, then central banks to that commercial banks will be XRP bridging their tokens. But say for example, from that commercial bank to that corporation, say Facebook, if they are using a different token or they are working on a different network instead of ILP, say Overledger for example, they can be using Quant to actually do that there. So the possibility of different assets coming in to different areas of the system is actually possible, considering we have a tier 1 tier 2 network systems, because the payment will not be directly issued and going through one system. Instead there will be two tiers where something which directly relates or contacts with the central banks will be there in the tier 1. They can actually do that stuff, and others will be like they will be actually going through and doing the transaction using the private networks. Say here in the tier 2 institution that can interact with tier 1 and hold and transfer tokens between themselves. In most implementation, this will represent retail users such as fintechs, corporates and individuals, or wholesale member of any other currency zone. So now in a digitized economy, even a corporate with a currency token can be called as a currency zone. Maybe that's actually possible. Now when we actually look at tier 1, that's what we have to actually keep in mind and understand. Privileged institution that can interact with tier 0. This is central bank. So who can actually work with central bank is the question. And hold and transfer token for themselves. In most implementation, this will represent wholesale financial institutions. So those guys who will be issuing wholesale tokens. Say for example JPM, they will be issuing that there. Even though they are corporations, they are issuing that one, and the chances are they will be using their network for payments inside as well, because they also have that network as of now, and to disrupt that it will take a bit of time, right? So privileged institutions will actually act as that. So whenever you see Ripple being highlighted by the World Bank, IMF, different central banks, do understand that it is a privileged institution in my opinion. So as we move forward now, we'll have to actually go through other news as well. So we'll actually pump it through. Now this tweet from CFTC actually showing that the final rule on cross-border application for certain swap provisions are actually cool. So what we just discussed here about the liquidity swap line is kind of summarized here by Matt, showing that CFTC just approved this one, and when they talk about that, they actually shows how the dollar liquidity moves from one central bank to another central bank in another country. So we actually went through that in a different simple form. I hope you guys actually understood that. So it's actually simple. 15 central banks are in and the swap lines are activated. Now the rule is actually approved. Now the next thing here is the custody service itself. So if banks are coming in and acting as custodians, what if PolySign custody solution will be the part of them? Instead, say they have competition from Fidelity, Buck and others. So banks, the traditional legacy brick and mortar banks, they actually need a support from technology companies. So what if PolySign will be the selected company for custodying the digital assets from banks? That will be a huge competition. And when we actually see it here, BTC, XRP, Ether and few other product coins, we can see 50% for XRP there. ROI after a period of 2 weeks. So there are different things and it's being talked now. Yeah, that's not completely believable. It's something being discussed in Quora, so it's up to you whether you have to actually take it in, digest it well or not. And we actually went through that one and that one. So here the next thing is Ripple's partner alliance may give way to Japan-Vietnam corridor. So a new corridor is being set up. So as we see, Asia, mainly East Asia, Far East Asia, is actually getting in fast. So the adoption rate here is increasing. So as say for example, South Korea is really tied in with US. Now yeah, there are some kind of issues with the military side and all, but anyway, the economic side is really tied up. So being an exporter of chips, yeah, now the current condition is not fair for the exporting countries like this, but we can actually understand there will be a lot of ties, and once these corridors are getting in and people are actually moving out of China and they're getting into actually Vietnam mainly for low cost manufacturing supply chains, they're actually getting into there. So once these are actually created, the corridor is going live on demand liquidity there, that'll actually push for additional adoption. Now then this one from US SEC, now that's actually generally talking about retail investors and how to actually protect that, the consumer protection and that kind of stuff. So they're actually talking like low cost trading options are emerging and people are actually going in, and money is actually increasingly moving into trading, meaning short term investments rather than going into long term investments. And that's why the financial education precisely is needed. Unless until you have that potential or talent to do these trades, execute and take the profits from these trades, it is too risky. Even if you have that kind of experience and ability, it's risky. But for those who are entering into the market, it's really risky. Say, they actually talks about retail investors going into short-term bets via low-costing trading platform, and they are losing money, and they are losing a lot of money, and they actually see that inflow of money in this particular area is actually high. So as we talked yesterday, money is actually flowing in. So mainly it can actually be going into crypto as well. Now, just for a quiet look for the technicals, when we actually look in the technicals for XRP in the charts. Now, if we look at these points, we were actually respecting these, right? We are now kind of breaking out for here on daily chart, but keep in mind the 200-day moving average is now acting as a resistance. Previously, it kept or pushed the price down. We kind of been there and reflected it with this area where we had overhead resistance line and the 200-day moving average, which kind of pushed the price down. But this time we are actually getting a kind of a good golden cross here from the 20 to 50. It's actually crossing to the upside. Now, yes, it's on a daily, and some doesn't actually care that for crypto. So moving back and zooming out, looking on the 3-day chart, we can actually see 20 is going to cross 50 on a 3-day chart, which is kind of a bullish sign, and you're getting a 3-legged green soldiers there. So that can actually push the price up to 0.27, which will be like around 30 to 40% gain from here. Yeah, around 33-34% of gain there. Now that's on a 3-day chart. So if you actually even zoom even more out, say going to a weekly chart, you can actually see that we still have room to around 20-30% till reaching the 10% to reach the 50-day moving average, which will be acting as a resistance here. But if we are to get this symbol here, say for example these three, okay, I'll just draw it. Say if we are to get this 3 here, then the chances are we may actually move until the 200-day moving average. Now, keep in mind here the 50-day moving average, 200-day moving average, and this long-term resistance line was actually a huge barrier. Whereas here, if we are crossing this one, then the push towards the 50-day moving average is like 50-day moving average is on itself on pushing the price down, whereas here it was together, the 50-day moving average, 200-day moving average, and the resistance line. So if we surpass this one on a weekly chart, then the room is open till 0.34. Now if we consider that from the current price level towards that 200-day moving average, that's 65% gains. Now yes, these are short-term targets, not the long-term goals, right? So if we actually move even out on a monthly chart, you can actually see that we haven't actually started that kind of a pump which we are actually looking at. But if we get an close of this monthly candle, about this mother candle here, reaching the 20-day moving average, which is the 0.269, say 0.27 area, that is kind of a bullish symbol, because here we may actually get a movement to the upside. As the MACD is, if you zoom in, you can actually see we tried to cross once, twice, we failed third time, and now it may actually give you a cross to the upside, which is, kind of a perfect symbol for buying opportunity. Now, if you actually don't care about the TA, just leave it, just go and, just listen and analyze the fundamental side just. But as far as I'm concerned, I believe fundamental and technical side are actually to be studied to take a better decision. So that's all for today, and if you guys like the video, do support the channel, hit that like button. If you're new here, do support the channel, hit that subscribe button. I'll meet you guys on the next video. Bye for now.